Hi, everybody. My name is Burke Franklin. I'm the developer of BizPlan Builder and creator of BusinessPowerTools.com. And with me is Phil Wolfstein, who is a certified business broker out of Los Angeles. We got to talking about what's it take to sell a business, because at the end of the day, we're writing business plans, raising capital, building a company. And then the holy grail is it's the biggest deal of your life is to sell this thing and live happily ever after. Phil, thanks for being here.
Well, it's a pleasure. And Burke, it's really great to talk to you. Love business power tools, the business planning and the information and resources that you provide. I have a great respect for, and so I'm thrilled to be on the show here. And I guess we were talking about, what are the four biggest things that I see like currently? What are current events? What do I see that are the four biggest barriers to business owners and
Yeah.
sellers
I
being
think
able to
you
sell
call
their
them
business, be prepared and
unforced
ready to sell
errors.
their business.
You call them
What's
unforced
that?
errors, the unforced errors that business owners make when they want to sell their business. I'm curious to tell me about that.
Sure. Yeah, no, and I'm happy to do that. Number one, I got to say, and we've talked about this before, is the lack of planning, the lack of preparation. 80% plus of small owner operators, and I'm talking about businesses that do maybe 500,000 in sales to 25 million in sales, five employees, an owner operator with a few employees up to about 125 or so employees with one layer of management. Um, it's very common. 80% of those business owners and sellers don't have a succession strategy, haven't really thought about planning or selling. They're great at what they do and they know their business and they know how to make money because they've been doing it a long time typically. But they haven't thought about actually selling the business, putting a plan in place. And that's amazing to me because the business and the goodwill in that business is a significant part not only of their financial well-being but also emotionally and from a ego standpoint. Well, it's a big deal. It's a big
Yeah,
a
yeah.
decision to sell your business, and it's financially a big impact. So it warrants that thought and consideration. But that would be the number one, I think, issue, when it comes to not being able to realize the value in your business.
Does that contribute? I mean, you've said in the past, look, a lot of businesses are just unfortunately unsellable. And then a number that I have it written in our webpage, even, businesses are unsellable or they're a train wreck behind the scenes. And it's funny, you're not the only business broker I've spoken with over the years, or over the last while anyway, different parts of the country. I said, what do you hear? Well, they'll tell me, they say the exact same thing. They even use the word train wreck, which I think is bizarre that so there's a perfectly good business, but it's a train wreck behind the scenes. What do you do about that?
Yeah, well, connect the dots. I mean, that's exactly why in the market segment that I define, that's why only one in five businesses actually that goes to market actually closes escrow and sells, which may
Whoa,
shock you, but that's the truth.
it's
And the reason is
impressive. Yeah.
because they're not prepared, because they're not really saleable. They're what we call asset sales, which is the owner and the seller hasn't taken the time to plan and prepare for the sale, implement those programs, invest the money, and make capex investments in equipment or systems, hired employees, brought in a level of management, and so on. I can make a long list that way, but not being prepared means that when you go to market, you're not going to realize you're not going to get a buyer unless you're planning on finding a stupid buyer that doesn't know how to evaluate books and records. You're not going to find a buyer that's going to pay you that multiple, that premium for your business that you really want to and deserve to realize to get the goodwill out of the business. 25 years plus of work and effort, and having made that investment in time and energy, one of the biggest commitments of your life, you should be able at the end of the day to realize the goodwill, sell it, transition it, see your legacy go on. And that's not going to happen without planning and preparation. And so there's a direct link, like train wreck means, is hand in hand with not having a plan, not being prepared, not thinking about working with a business coach or business advisor, financial advisor, having a good CPA, working with a business broker, even in advance, ideally 3 years, 36 months prior, to find out what's my business worth. What's your baseline? What is my business worth on today's market, arm's length to a qualified buyer? And that's going to invariably highlight, well, what do you need to do that you're not doing right now in order to enhance the value that of the business, because that business valuation is going to show you that you've got an HR issue. You don't have management or a replacement. We're not selling the business owner and the operator. We're selling the business. And that's probably my second biggest point would be a lot of owner operators, they're focused, they're great at what they do, but they can't delegate or let go. Got to do that. If you want to sell it to a buyer coming in that's going to buy that business wants to be assured of continuity of income, that return on investment. They want to make sure the sales are going to be maintained, that the income levels are going to be maintained with the training and transitioning support of the owner, no doubt. But they need to know they can do that. And if the business is really owner operator dependent, 60 hours with 55, 60 hours a week, what happens when you leave, when you're not there, when you don't have that personality in place? So that's that's all related to a successful outcome. For me, I don't mind at all doing a broker opinion of value and coming up. I'm qualified to do that to determine what the value of business is on today's market to a qualified buyer. But that may very well lead to a recommendation or a suggestion that Mr. Owner, what you need to do is, or I recommend you do, is talk to a business advisor, a coach, or the necessary professional to help you develop a plan, like Business Power Tools of
Well,
Burke Franklin.
let me interrupt you for a second because you talked about the
Sure.
plan. Of course, I want to sell business plan software, but I didn't write it just to sell business plan. I wrote it because I wanted to help people. I go back to the 200 mile per gallon carburetor story that I tell as a kid. Where'd it go? Why aren't we getting 200 miles per gallon? Why isn't that guy in business? And so I see all these products and services, some great ideas. In your case, now at the other end of the spectrum, not starting the business, but selling it. So that business plan that one would write ostensibly to pitch investors at the front end, use the same business plan at the end to kind of for succession planning. If you give it to your kids, they want to pick up where you left off. But doesn't the new owner need to understand the problem you solve, how many people have it, who's got it, where this thing goes, really the context around this business and why this business works? And to me, it seems like this owner's manual is the way for the owner to get out of having to be there. Because as I understand it, you said before that the less the business needs the owner, the more the business is worth.
That would be that. I mean, what you're describing would be an ideal. If you ask me how many times do I see a business owner that has a plan that's updated, that's current, and keeps it current quarterly, semi-annually, even annually. I can count it on one hand in over 10 years of doing this with
But if
uh,
they
with
did do
with
that,
working with
what
business
difference
owners and
would it
sellers.
make? What is that
What's that?
costing them not to do that? What would happen if they did do that?
Oh, I think it's leaving money on the table. It would be that having a plan, executing on it, modifying it, updating it, and would there be a direct correlation between that improved operations functioning and valuation at when you go to sell? A business owner or buyer coming in that could see a plan, look back on it, and be able to see the progress and see what's being done, what the investment criteria is, and how that translates into increased sales and revenue, and where they go, and what they're ideally doing looking forward the next 12 months, absolutely would be a useful tool and desirable for selling the business. I don't see that, but boy, I sure would love to see that kind of planning.
Well, how can you quantify how much? I've never asked this question before. What would that be worth? I mean, let's say you're selling a business for $10 million, pick a round number, and if they had this plan, or the business is worth 10 million bucks as is, but maybe it's just as an asset sale. But let's just say you got a proper business, you could sell it for $10 million worth just assets only with no plan. But if you had the plan, you had the employee handbook, you had the job description, you had everything, well, basically you can get from us in there, implemented and up to date, what would that add to that $10 million sale? Would it make it $11 million, or would it just 10 million,
Well,
100,000?
$10 million, and we're typically for the businesses I'm working with are going to sell on a multiple of sellers' discretionary earnings. That's not universal. Different businesses, different industries
Yeah, sure.
have some different criteria. Maybe a business might be typically valued on a multiple of revenue, as an example, but most typically it's a multiple of sellers' discretionary earning, a fancy term for what is the business making, a bottom line before tax, adding back one owner's salary and their taxes, and 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 the employment taxes, and then any non-cash items like depreciation and amortization. So and interest. So what you're looking at is what is a business making before tax that a buyer would be able to look at and use that as a measurement of what he's going to have available to him for debt service and compensation, right? And that gives him, and that's going to tie into his return on investment. How quickly is he going to get his return back? So his money back. So if you're looking at a multiple of discretionary earnings, which is what's the typical metric is, then what you're speaking towards would be a business that's well prepared, that can show continuity and growth in sales and revenue. They've got their policy books, employment books in line, up to date,
No
and
skeletons
they
in the
have a
closet with
business.
employee
Yeah,
lawsuits and stuff like that.
yeah,
Yeah.
yeah. I mean, where they've got where they're actually where they are making it easy for a buyer to come in, step into the business, understand how they're going to run it, how they're going to operate that,
Yeah.
how they can leverage that up. That speaks directly to the multiple that a buyer is willing to pay in the marketplace.
But,
So
but so
if
let's say
the
you have that multiple, all that, everything you just said, imagine whatever adds up to $10 million just for math, simple math.
Right.
Let's say but they don't have the plan, they don't have the policies, they don't have the procedures, they don't have all that stuff in place. What would all of this stuff add to? I'm trying to get to what would make this worthwhile. Where a business owner would say, you know what, I got to do that, versus like, I don't need it, it's not worth it. So how much
let
is
me
it
give you an
worth,
example.
really?
You're
I've
using
never.
a $10 million sale. I guess you're talking about 10 million sales price, right?
If it
So
was, let's just say
if
it
it
was
was a
10
10
million, but
million sales price,
and
then
you,
you might be looking at, and it depends on the business here. I'm just using a
yeah, sure.
generalization because every business is different. And so this is just by way of example.
Yeah.
Let's say that the business is making um, and a 10 million, let's say you're going to be looking at three to four multiple most likely. That sales could be higher, depends on the software business could be worth more, but say for a manufacturing type business, that you might be looking at something around a three multiple to four multiple. Main Street America, which is your nail salon, hair salons, restaurants, so forth, typically can trade at around a national average about a two multiple of SDE. So if you're looking at something at three to four multiple, let's say three and a half. Okay, so my razor like mine says you're probably looking at something that's making about 3.3 million in SDE. It probably in EBITDA would be different. So I don't want to confuse terms. So I'll stick with seller's discretionary earnings. At a 10 million in sales, you might be using EBITDA as a metric. But let's say as SDE, it's a 3.3 multiple. That's going to give you a 10 million sales price, right? So if you are the difference that I would make here is with a really well-run business, well-structured business on a business plan where they're hitting on, if not all eight cylinders, seven cylinders or better, from a business coach, business advisor's point of view, and the marketplace, more importantly, the buyer's point of view. You might be looking at closer to that four multiple than the three and a half multiple. So a half a point on half
Do the math
multiple
for me on that
on.
one. I don't do math in public, but I'm just
Okay,
trying to
well, I'm
see
just
like
saying, it could be that could be worth, if you're talking about the increase in the multiple would be substantially greater than any cost or expense that would be in preparation or advisory services or using that. You get a very high rate of return by making your business more saleable and making it easier for a buyer to step in and run it.
so what would it be worth? I mean, I'm just trying to get to this. Let's say that all things considered, it doesn't matter what business you're in, let's just say it's 10
Yes.
million bucks that the initial sale would be. And then they write a business plan. I'm just trying to get a sense of what would it be worth to write the business plan because I can see someone saying, no, I don't want to do that. Because it's some work. I mean, putting together the employee handbook, and of course, we have templates to make all this ridiculously easy, but maybe even
Right.
fun. But I'm just trying to think: is it worth $1 million to do that? Is it worth $100,000 to do that? Why should I spend my weekend, or a couple of weekends writing business plans and all this stuff when I could just say, screw that, sell the business and go to the beach? but I'm thinking that
Okay, so I'm
last
going to
ditch
give you, I'll
effort
give
might be
you,
worth it.
okay. In that, that example that I gave, let's say if you're talking about, let's say 3,333, let's say, okay, so times 3.5 multiple, that would actually come out on a 3.5 multiple, it comes out to, let's say, 11,666. All right. If you're talking, if we're looking at a business that's making $3.5 million and you're selling it on a 3.5 multiple, if you take that same business and
So it could go
one second.
half a point, half x in multiple. So you can go from
Yes.
3.5x to a 4. And so 3.5 times 3.5 is, what is that? Million and 500. And 4 times that is going to be 14. I hate doing
And
math.
that's a different, yeah. So you got
So yeah. So 3.5 times 4.
okay, times 4. So you're
Yeah,
talking about 13.3. So I mean the difference between a 4 multiple and a 3 multiple when you're talking about
that's huge.
it's significant. 3.5, 3.5. So 14, you're talking about a few $1 million difference.
Well, it's 10.5 at 3 times 3.5,
Right.
but 3.5 times 3.5. Anyway, yeah. So look at it. So it's worth about $1.5 million to write a business plan and put all this stuff together and spend a weekend or two working on this.
And it makes, and then it also, you have to speak towards, it makes the business more saleable. You're gonna find better quality buyers faster, and you can't underestimate the cost and time and expense and resources required to sell a business.
Yeah, right.
So being prepared saves a lot of money and time, brings the quality buyers forward, and improve the multiple. If you can improve the multiple that applies to your particular business, right? The amount, the value benefit to the on the sales side, on the price of the business, by far and away offsets any costs
Yeah.
of working with professionals to help you develop a plan to get there. That's my point.
How often do buyers finance these with finance the purchase of a business with an SBA loan?
It's less common now than it has been in the past because of the increase in interest rates.
Yeah.
But I would say for me, I would say it's about 1 in 4. So right now, seller financing is predominant, which is buyer down payment, maybe assumption of some debt, but more typically it's a seller down payment and seller financing
So
is
I mean,
for the
so the
businesses that I'm
business
working
plan,
with.
if they're going to get a loan from the SBA, they require a business plan. So 1 in 4, the business plan is for the financing. Now, any
Yeah.
bank, I think, is going to want to see a business plan because, well, the
Yeah,
SBA did.
commercial lenders do too. So if you
Yeah.
factor in, I mean, a combination of seller down payment, if it's not an SBA loan, then maybe some commercial financing and seller financing. And I would say, yeah, and maybe half of the deals, require a business plan or would mandate that, but they should be it should be applicable to all
I
the
would, I
deals.
would, and for those who paid cash for it, I would think they would want to see the business plan because the business plan really gives them the whole blueprint, the recipe for how this business works. Now they're going to go in and change it and do things differently, I would imagine, but nevertheless,
Sure.
at
And I'm
least you've
sure
got
you're
the
waiting to hear what my
foundation.
number three, I'm sure you're waiting to hear what the number three item
Oh
was here.
God,
So,
there's a third one. I haven't
but
even
yeah.
gotten to the third
So,
one. Okay.
yeah. So and that would be waiting too long, waiting too long. Okay. The best time to sell your business, and this is the former entrepreneur business owner, I had my own businesses and I've sold them, is when the business is doing well, when you're tracking up after you've had your great last, ideally 3 years, but you've had, things are hitting, are doing well, your revenue's up,
Yeah, you don't want to sell when it's
your
down.
bottom line is doing well, and you've got great employees, and you're prepared. That's the time to go to market and sell. I see far too many situations where the owner and operator, full-time owner and operator, waits, hangs on, hoping things are going to get better, or just burns out, gets tired, medical emergencies, whatever the life
Hmm.
brings you. And we all we all know, SH happens. We don't plan on things going the south, but they do. And if you don't take advantage of that peak when the time is right, when you have your health, you have your family, you've got your vitality, and you've got enough money and resources, seriously think about going to market and selling. That's how you get the right buyer. That's how you get the best value. I see way, way too many businesses where they wait 2, 3, 4, 5 years past that peak and end up losing a lot of goodwill and a lot of value, leave a lot of value on the table.
So especially if you're on an upswing, right, or even if we're on a down, but you're thinking, what can I do to get this business in that sweet spot, the Goldilocks spot where in 3 years from now, let's say. So you're
Yes.
thinking, you're looking out 3 years. So you got your plan, you got your policies, your procedures, basically have that in place and be working with it, of course, and then you're ready to go.
Yep. And my number four, because I know we're getting to the end of the show here, books and records. Okay, making sure that your financials are in order, up to date. I'm actually working on a listing of selling right now for a precision machine shop that still is doing quarterly statements with their CPA and sending them literally like a shoebox of their invoices and their receipts every month. That doesn't cut it in today's market. You need
No.
a QuickBooks, or you need to be able to pull your P&Ls and your balance sheet and get your financials daily would be ideal, but certainly monthly.
They
And I
need to
mean,
be
it's like
audited. Can they be reviewed? Is there any rules there? I know for certain investing, you've got to have them audited or reviewed. A separate independent CPA is going to look at the books and say, okay, let's see what this thing really did.
for me, and I think in a lot of the with the M&A type deals and middle market deals that you're involved with, Brooke, I think, yeah, I'm sure that's the case for a lot of the businesses that I work with. They don't do review or audit statements. I mean, I think it's too costly, or it may be a little bit, it's overkill. It's always good. I mean, I certainly would advocate. I'd say, yeah, that would be the best.
Yeah.
But having up to date, like QuickBooks, or having a CRM system and have up to date accounting systems, have a good CPA or bookkeeping system where you can get your current financials. They're accurate, where your P&Ls can tie into your tax returns, looking back a few years. These are all important things that if I'm saying that right now and you go, I'm not there, I'm not doing that, and I just haven't had time, that then now falls under the planning and preparation stage. Start now, start today,
Yeah.
get a good CPA. If you haven't been doing it, start investing or thinking about what you're going to do to get your financials and books and records in order, because it's going to be necessary. Any buyer coming in is going to want to review those and to see them and have
How
confidence in
far
them. So
back
that
does
kind
a
of makes sense.
buyer typically want to look? Are 3 years enough, or do they want to go back? You've been in business 20 years, but your last 3 years are what they're interested in, or do they want to see the whole thing all the way back to the beginning of time?
Question for my broker opinion evaluation. I look back 3 years and then look at and put an emphasis on the trailing 12 months. Want to get updated financials as you go through that. Some buyers do want to go back further, but I would say the heaviest emphasis is on trailing 12 months, the last 12 months worth of business performance, and then look back to 3 years to see, because that'll generally highlight any trend
Yeah.
that's ongoing. And we go on. These are just, I mean, we've got, what's funny is we have a list of topics. It's probably an arm's length long, but sure is fun talking to you about this today.
Well, it's a big deal. I think, I mean, I started this business helping people raise capital from venture capitalists back in Silicon Valley 35 years ago. And it was a whole different world, and of course now we've got a lot of baby boomers who want to sell their businesses. And this is it. This is for them. This is the how do I get the most out of this thing that I've been working on all these years? And unless they've got a dozen businesses, I don't know many people have that many, but just at least you got the one business. And this is the either you do this right, you set yourself up for a retirement at the beach in a nice place, or you get your fishing boat, whatever you want to do. But if you blow it, I think you don't have time to recover. It seems to me.
No, it's a big deal.
Yeah.
Financially, emotionally, on any level, it's a big deal. As an owner operator, I take that very seriously. So happy to help you, assist you. It's Philip Wolfstein, Zoom Business Brokers. My phone number is 310-663-2180. The email is phil.wolfstein@zbbcorp.com. Zoom Business Brokers. Check me out on LinkedIn. Hope we can have another conversation soon, Burke. It's great talking to you and appreciate the opportunity.
Yeah, Phil, thanks for coming on and talking about that because we start at one end of the spectrum, like I say, helping people start their businesses, and I find myself, this business plan all makes and everything I've got makes even more sense for someone who's selling their company. And of course, the good news is about people selling their business, they know the business. A lot of these startup people, they don't know the business yet. They're working on it. They've found a problem, they've solved the problem, and now but they haven't looked at the world spectrum of all these places of how this business could work. And someone who owns a business, they've been down the road, they know it, they got the money to pay you, to pay us, to whatever all the help they need to get the CPAs and the financing. And of course, they're motivated. They've got the carrot is out there to sell this thing. So all things line up, and that's really got to get that, help them get that right. So I appreciate your comments, Phil. I appreciate your promoting business power tools to your clients because, well, we're helping everybody as best we can here. So I'm Burke Franklin, businesspowertools.com. Give us a look and let us help you with your business. Thanks for watching.